All right, let's dive right in. Today, we're taking a look at the Cardano ecosystem, and let me tell you, innovation is cooking in some ways you would absolutely not expect. We're about to go on a journey that starts with complex digital code and ends up somewhere much more, well, concrete.
So let me just ask you this. What does progress on a blockchain actually look like to you? Seriously, is it just about new algorithms and transactions flying around in the digital world? Or could it be something you can actually, touch and feel? As we're about to see, the answer is pretty wild.
Because what's happening right now is really a tale of two different frontiers. On the one side, you have these incredibly sophisticated financial algorithms. And on the other, you have awnings. Yep, you heard me right. Awnings. Just stick with me here because that crazy contrast is at the very heart of this story.
Okay, so let's start on some familiar ground, the digital side of things. We're seeing this whole new level of financial tooling being built, and a great place to start is with automating trades right on the blockchain. This is all about making the network smarter, faster, and way more efficient for everyone.
So what is trade automation really? Well, put simply, it's like having a super smart robot that executes your trading strategy for you. It can spot tiny price differences between exchanges and act on them in the blink of an eye. I mean, way, way faster than any of us could ever hope to click a mouse. Now, projects like Surge see the value here in three key ways. First, for you, the trader, it's about profit, grabbing those little arbitrage opportunities. For the whole ecosystem, it creates efficiency, which helps keep prices more stable. And for the network itself, it just means more trading, more volume. It's a classic win-win-win situation. And listen, we're not talking about tiny fractions of a cent. These automated strategies can actually target profits of 1%, maybe even more, per trade. Now, if you've ever put your assets in a standard liquidity pool, you know you're often looking at single-digit returns for an entire year. So yeah, this is a totally different ballgame. And this kind of sophistication isn't just happening in trading. Let's flip over to the other side of the DeFi coin, lending. We've got projects like Surf Finance that are really focused on making our digital assets work a whole lot smarter. Surf is in the middle of rolling out some huge upgrades in their V2 testnet. I mean, we're talking about dynamic interest rates that actually adjust to the market, the ability to make partial repayments, and just way better tools to manage your positions. This is a massive leap forward in flexibility for pretty much everyone involved on Cardano. And they are not slowing down. A quick look at their roadmap shows a laser focus on security through audits, plus they're expanding what you can do with things like multi-collateral and community pools. It's pretty clear development is moving full steam ahead. You know, this whole theme of building deeper, more functional markets is happening all across the ecosystem. You've got projects like Pulse on the Midnight Network, and they're already out there talking to market makers to make sure there's tons of liquidity on day one. The main takeaway here is that the digital foundation of Cardano is getting seriously strong. But what if I told you that the most surprising, maybe even the most important thing happening right now has almost nothing to do with code? This is where things take a really fascinating turn. We are literally moving from code to concrete. We're going to look at a venture that is totally blowing up the definition of what a blockchain project can even be. Everybody, meet Angel Finance. Back on March 6th, they didn't launch a new token, they didn't deploy a new dApp. They bought a restaurant, a physical brick-and-mortar business. And as you can see from this timeline, they got to work immediately. Renovations, cleaning, gunning for a grand opening in just a couple of months. Their whole approach becomes crystal clear with this one decision. They could have taken the easy route and just operated as a franchise, but they didn't. Why? Well, it all came down to a really sharp business calculation. Just look at these numbers. A franchise would have taken 5% of their gross sales right off the top, plus another 2% for marketing. By deciding to go independent, they get to keep that entire 7%. That's money they can reinvest, build up savings with, or eventually distribute as profit. It was a calculated move to maximize every dollar. And we're not talking about abstract digital work here. This is real, get your hands dirty effort. Power washing the building, painting, ripping out old equipment, dealing with health permits, and yes, finally, replacing that old beat-up front awning. This is as real world as it gets. So, how do we square this? How do these two worlds connect? You have an automated arbitrage bot on one side and a team renovating a 20-year-old restaurant on the other. Why do both of these things matter for the future of the ecosystem? Well, think of it like this.
You have innovation on two fronts. On one side, that digital core is being hardened with things like arbitrage bots and dynamic lending rates. And on the other, you have teams tackling real-world problems, like getting health permits and fixing equipment. It's all a form of building. It all creates real value.
Seeing all of this together really forces us to ask a much bigger question. It challenges all our old assumptions, and it kind of pushes us to redefine the very idea of what a blockchain project is and what it can really do. So I'm just going to leave you with this thought to chew on. When a crypto project is just as concerned with health permits and awnings as it is with algorithms and liquidity pools, where does the frontier for this technology actually end? Maybe the most exciting answer is that it doesn't.